All right, everyone, here we are with ticker symbol TSLA, Tesla Inc. And before we jump into this chart, I want to say welcome to all my first-time viewers and investors. Welcome to my channel, Invest for Tomorrow. To all my subscribers, welcome back, and let's jump into this chart. So Tesla has actually been in a bearish run since October 14th. It broke through the 50-day moving average. It's been struggling to get back up, and every time it goes further down, the bulls try to reappear, and then the bears just continue to tear this one down. So there's some important numbers here that have been broken through, and I want to point out down here at 426.47 how important that is, because that was kind of midway on one of these bullish runs here, that if that gets broken through, this could be well on its way to newer support levels and newer lows. But as of right now, the bears are slightly dominating and the bulls are trying to put up a fight. They're trying their best to pull this up, and they're doing a good job. Every time they pull it up, they either break through the 50-day moving average for about an hour, or they get real close to it. So we're going to have to see how this tug of war plays out tomorrow and the rest of this week. But support was broken through, and resistance was nowhere near found of being caught up to, right? So we're going to look at our new resistance levels and our new support levels as this has changed slightly a bit. So we're going to look here and see what's important, and then I'm going to also talk about this a little bit more broader, so that we can see what is going on if it breaks through these numbers. So again, like I said, down at 426, it's an important number. If it breaks through it, which was one of these lows here, one of these large bearish candlesticks in this bullish run, and that's important. But let's zoom in here and see what's important for tomorrow. And then we're also going to talk about it at the lowest point that it reached, and then one of the highest points that it reached within the last couple hours of the time frame. So the first thing is the 50-day moving average. Obviously 50-day moving average is 444.05. I land on it exactly. Let's see right there, 444.05. Super important number. As long as we're below it, the bears are in control. The moment we're above it, the bulls are gaining control. So that's important to keep in mind, so that we know what side of the chart we're in. Now, for the bulls to actually get their way up there and get closer to the 50-day moving average after being at 433.50 currently, they need to break through this resistance level. This is where it leveled off and one of the highest points before the bearish fall started. So I know that this candlestick is there, and that's a great point of reference as well, 441.07, to keep in mind, right, where this is going. But this is where it leveled off and where the bearish trend actually started, because if you really think about it, this is a bearish candlestick, and while this is a bullish candlestick, it was still on its way down as we see it. So this is the point of reference that I would refer to as our resistance, which is 440.57. Bulls need to turn that into a support to start to work their way up to newer highs and newer resistance levels. This does not signify that the bulls have gained control, because we are still in bearish territory as long as we're below the 50-day moving average. This just gives us a sense of direction of where the stock may be going, and if the bulls are building momentum to start to work their way up, and if they can use this as support, obviously bounce out and start to reach the 50-day moving average to get back into bullish territory, newer highs, and newer resistance levels. So 440.57 needs to be broken through by the bulls to get closer to their goal, which is crossing the 50-day moving average. Now, the support level is important because we're already in bearish territory. We've been in it, and if it gets broken through, we're getting deeper into bearish territory. Obviously, if this gets broken through, the lowest point right now of the day was 428.86. I'd write that down to keep in mind and see the behavior of the stock between those two numbers, which is the lowest point and also our support, which is 429.97, and see how quickly is it breaking through newer lows. Is it kind of hanging out in between or close to these numbers for the bulls to reappear and start to build momentum, or is it breaking through both, reaching newer lows and quickly reaching newer support levels? So I want to emphasize to all investors, pay very close attention to how this stock reacts if it breaks through support, which is 429.97, and starts to pull away from the 50-day moving average in a downward direction, and how quickly is it doing that. And look at the inflow, the outflow of the stocks. Put your 1 minute, 5 minute, 15 minute chart so you can go ahead and see how quickly is it moving down, who's dominating. Are the bulls and bears having a tug of war, or one or the other is actually dominating the chart? So pay very close attention to how this stock reacts if it breaks through 429.97. And again, if this resistance level is broken through, which is 440.57, it does not signify that the bulls have gained control. That just gives us an indicator that this is on its way to get back into bullish territory. Obviously, the bulls need a breakthrough there and start to work their way up to reach the 50-day moving average. As always, I hope that with these cues, you guys are well equipped and prepared to make your own rational decisions as investors. And if you feel inclined or encouraged to subscribe, please do so. But don't forget to click on the bell. By clicking on the bell, you can go ahead and receive all notifications and not miss a single video that I post by turning on all notifications so that you're up to date on every single chart analysis. Share this with your friends and community, and don't forget to click on the like button to let me know you watched this video. Thank you guys so much for watching, and let's make some money. At the end of this video, there's going to be a pop-up video, and I go into detail about the S&P 500 index and how it's been rising up several points on scheduled dates. What happens on those scheduled dates, which are the dates that I circled here on the chart and we're going to see for ourselves? Well, the S&P 500 index rises up several points, and by doing so, they're bringing up several ticker symbols, not all of them, but most of them, up with them. And these ticker symbols are rising up 30 cents to $3 per share. And I know it doesn't sound like a lot, but per share, that does add up. And one thing I am really big on is profits. If you put $1 into the market and you get out with $2, you've made profits. You've done what the whole purpose of being in the market is for, to maximize profits and minimize losses. And with the Federal Reserve pumping the markets on these scheduled dates, bringing the S&P 500 index up also brings up individual ticker symbols with them. And again, 30 cents to $3 may not sound like a lot of profit per share, but that does add up. And like I say, profits are profits. So we're going to look here at some of the dates so that you guys can see what I talk about in the video. And it's a weekly series. I wouldn't want you guys to miss out on it. Definitely click on the video as it pops up at the end of the video and check it out. But here we are with one of the first pumps in the scheduled dates pumps. So the first one, since the last time that they had released this, they released this on September 14th, and the next one's coming up on October 14th, which is like a week from now. And on the 15th, they scheduled it. And as you can see, this is the 14th, and the 15th is this big green bar, and it rose up. So on the 14th, we were at around 33.84, and it rose up to 34.20. I mean, that's 40 points risen on the S&P 500 index, and that's creating that catalyst for individual ticker symbols to rise up 30 cents to $3. We're going to look at another one here, and the next one was on September 22nd. And here we are on the 21st, after falling from that last pump, and the market had been falling, and you could see that there is volatility on every single day of the market before the dates of the pumps, but on the dates of the pumps are the days that the most green happens, for the most part. Not every time, but for the most part. But on the 21st, which was a Monday, it was rising up, and it rose up to this point here. And the next one was the 22nd. So this is the last 21st candlestick, and this is the first 22nd candlesticks. And we were at 32.70. This one rose up all the way up here to this point right here. This was the last 22nd candlestick to 33.19. I mean, if we go back, we were at 32.70, 33.19. That's almost 50-point jump here for the S&P 500 index. And again, individual ticker symbols rose up with it, and it created that catalyst a little bit before the anticipation, and on that date it rose up. Now on this next pump, which was a little bit different, there was a catalyst formed beforehand, and it rose up to these highs on the 28th of about 33.59. It actually dipped on the date of the next pump, which we see it here, which was on the 29th of September, and the next one was on the 6th, which just happened yesterday, and it actually slightly dipped. Now, not every time is these pumps going to rise up the market like we've seen here by a lot of points, but it still rises it back up or levels it off from hitting newer lows and leveling off the market itself. Because if we look at the previous notes that I did beforehand, it was actually rising up with it. The volatility was there, but you were able to buy, like for example, how we bought here on the 15th and it rose up. Well, it's been falling and then very volatile here, up and down. Beforehand, you can buy at the beginning of the scheduled pump dates and hold a couple weeks and ride out several pumps, and you were going on your way up. But right now, even as the market's going down, it's a great opportunity to take advantage of the fact that the Federal Reserve is pumping the markets and there's an opportunity to make profits. So here we are on the 29th, and it fell to lows of 33.28 and it rose up to these highs here of 33.49. I know it doesn't sound like a lot, but that's still a 20-point jump after dipping and recovering, and then it continued to work its way up to newer highs. Now here on the 6th, which on the 5th it started to rise, it leveled off. This is the last candlestick of the 5th coming up right now, and we're about to see it here. Yes, this is the last candlestick of the 5th, and it rose up, and all the way to the last candlestick of the 6th, it rose up another 20 points. I mean, we're down here and it ended up around here. So right now, something I'm noticing is that these pumps are creating less of an effect on the market, but it's creating that upward direction from falling to newer lows, but it's still helping the market rise up. And even though the S&P 500 index is rising several points, there are individual ticker symbols rising up, like I said, 30 cents to $3. Check out the video. I go into more detail. I don't want you guys to miss out on this great information. Click on it, and thank you guys so much for watching, and let's make some money.